I want to bring in Kevin Green, senior markets correspondent, to help set up the action today. All right, KG, before we get into equities, let's talk about the setup for energy, especially as it relates to geopolitics. On Friday, you had that meeting between President Trump and Russia's President Vladimir Putin. And now today you have Ukrainian President Volodymyr Zelenskyy coming to Washington, D.C. So how do you assess the impact as it relates to energy markets?
Yeah, I mean, for right now, we're kind of in a holding pattern when you're looking at crude oil or even natural gas continues to slide to the downside here. From a technical standpoint, both of those products are in kind of bearish formation, so the market probably is looking at potential more downside here, especially if a deal is able to be hashed out by today. And the upside risk is pretty high, actually. If you kind of look at the crude oil options, they're relatively cheap compared to the potential implied vol that we could see from this meeting today and over the next couple of trading sessions here. So we have not seen any type of significant bid yet within the energy complex. Crude oil below that $65 level continues to be a little bit of an area of concern for a lot of traders within the commodity complex just in general. You can make the case that the next area of support is sitting at around $57 to the downside. But we have not, once again, seen any type of aggressive action to the upside or downside. The primary trends to the downside here, Diane. But any type of pushback that we have, especially from European leaders, which I think is actually the really big key, not so much Vladimir Zelenskyy meeting with President Trump, but you also have several European leaders, kind of in an abrupt fashion, drop everything that they're doing and coming over to Washington, D.C. That's actually a signal there that maybe this may not go as smoothly as predicted or what the White House would hope that it will go. So yeah, keep your eye out on this meeting here. It could actually provide some fireworks within the commodity complex just as a whole, not only for energy, but also for the grain complex.
I also wonder if that has to do with that last meeting with Zelenskyy and President Trump, where there was kind of an abrupt end to that meeting and the optics around that were shaky, essentially. So I wonder if that's also in play there. Let's talk about, though, the impact to equities. As I understand it, we're not really expecting any fireworks in terms of impact to equities. And I mean, I suppose the only thing that could happen is if there is a peace deal, could that be a potential tailwind?
It could be. I'm not sure how much the equity market is really focusing on this particular matter because it has been happening and going on for so long. Usually when you have events like this, the market then kind of adapts and really focuses on other areas. And I think that's really what the equity market's kind of signaling. Could the initial reaction be to the upside? Yes. But is it going to be the reason for a new catalyst for us to move another 5% to the upside or 8% or what have you? I don't believe so. But we will see. What's actually very interesting is some of the demands coming from Russia are still fairly aggressive. They're not really giving up much based on what we are hearing from the news reports. And in fact, what will actually be very interesting, if you remember, we signed an agreement with the Ukrainian government here for a minerals deal in order for us to kind of have companies kind of step in and assist and have access to some of their mineral deposits. But if you look at the areas where Russia is actually proposing that they actually take over, it's a significant portion of the mineral business just in general for Ukraine, which kind of throws that security guarantee deal, if you will, into question. So once again, I think that's another reason why the European Union is really trying to send a significant amount of representatives over, not because it's a done deal, but maybe they want to actually push back on some of the Russia demands because it would be, once again, a little bit, I wouldn't say unfeasible. I mean, there still could be a deal there, but you're talking about 30 to 35% of the mineral resources going to Russia if they get their way. So it'll be interesting, but I'm not sure if this is going to be a major catalyst for equities to continue to move higher. It might be a decent intraday bump, but long term, I think we're still focusing on earnings power, and we're still focusing on the Fed.
Okay, so speaking of earnings, I know it's a big week for retail, but we get Palo Alto today. Talk to us about the setup and what the expectation is.
Yeah, for Palo Alto, I mean, obviously every time we have this earnings announcement when it comes to this name or even a CrowdStrike, the earnings bar is fairly high. And we've already seen kind of that reaction with CrowdStrike. In Palo Alto, we might also have a high bar going into this. And they're a little bit more open to mid-sized and smaller businesses that might be pulling back some of their spending because of the tariff uncertainty that we do have. So the market is actually expecting around 89 cents for the adjusted earnings per share. And then the revenue estimate right now is sitting at around $2.5 billion. So this will be an interesting interesting report. We'll get a little bit more insights to them as to where they are seeing demand and if there is any type of softening within the, let's say, the middle tier of companies that is a significant part of their customer base. Now, the technical setup actually looks pretty decent, where it is actually hitting a key area of support around that 175-ish level. So could we see a nice reaction or an aggressive reaction to the upside if they are able to exceed the street's expectations? I would say yes, but we haven't seen any type of aggressive guidance coming from Palo Alto Network in about a year and a half or so. They're pretty conservative, and their commentary on the conference calls are also, I would say, realistic. They're not really rosy or trying to paint some picture that's hope and a dream. So very interesting report today, and once again, significant exposure when you're looking to mid-sized businesses and small businesses that leverage their products on a day-to-day basis.
And then, KG, let's talk about where we look for the S&P 500. What are your targets both to the upside and the downside today?
Yeah, to the upside, 64.85. To the downside, 6,400. We're trying to coil right now on the intraday chart if you're looking at the 5-minute chart. But on Friday and even on Thursday, you did see some aggressive selling on any pops that we saw in the market. And if we do see a drop in liquidity, that probably gives a little bit more of an opportunity for volatility to creep higher for this week and a potential for a pullback. So we have Jackson Hole on Friday. We have some other economic data this week as far as housing data. But for today, I would say a little bit more downside positioning than it is for upside positioning.
Okay, I'm glad you mentioned Jackson Hole on Friday. It feels like the pressure is on, especially when we think about the path last week with the bulls pushing equities higher overall. Is that the sense that the pressure is on the Fed chair for Jackson Hole?
It is. I think the big question is it 75 basis points for the remainder of the year, or is it 50 basis points? I don't think the market is really questioning that we will see at least 25 basis points in September. If he does kind of shoot that down, that would probably be a downside catalyst for the equity market. But we're just trying to get a sense as to how are they really trying to balance out their dual mandate from employment to inflation. The PPI number definitely scared a fair amount of people, but PPI is also a very volatile number, so we just have to get more data. He's probably going to say that over and over again, and we'll see how he actually manages this whole situation. He also has to manage the dissents as well. Obviously, we had some symbolic dissents in the last meeting here. If that continues to grow, it makes it very hard for him to really hold rates where they are at because of inflationary fears.
All right. Yeah, and PPI was, it feels like it was just a blip in the road ultimately. Thank you, Kevin. That's our Kevin Green, Senior Markets Correspondent. Appreciate it, KG.